Hey everybody, welcome to Stock Snapper Trading. Thanks everyone for joining. It's 11 a.m. Eastern. It's Tuesday, June 30th, and the markets are moving. And what we're going to do is we're going to get into it. We're going to go over today's news, and we're going to analyze gold and NASDAQ today. And we're doing a post-New York session, so we're going to be here for approximately 2 hours till about 1 p.m. Traditionally, when we trade at this time, we don't necessarily always get the best volume to trade. Sometimes it's really consolidated, but right now it is moving, so we'll see how it moves for today. And I hope you guys are having a great day. I'm coming up, following up Dave's call. So Dave went live this morning. Some signals have been sent out. They've hit a few pips. And Dave also had a live New York session where he did Comex and Wall Street. And now we're going to come in and do a follow-up session. So hope you guys are doing good. Hope everyone's having a great day. Hopefully you guys are staying cool. There's a heat warning like globally across the world right now, where it is very, very hot and humid. And just hopefully everyone can stay indoors, air conditioned, make sure you're drinking lots of water, and stay cool. Guys, if you guys were watching the World Cup knockout stage now, games are really, really exciting. They're going to the penalty shootouts. And unfortunately, Netherlands and Germany lost. Morocco won. So Canada will play Morocco in the round of 16 comes Saturday, I believe at 1 p.m. Eastern. So super excited about this game, and hopefully Canada can continue to move forward in this tournament. Okay. And I hope your team is doing well, as I hope your team is going deep too as well. There's a lot of good games, like the Brazil-Japan game. That was amazing. The first half was unreal. So lots of good football. Guys, so let's get into this real quick. Forex Factory, let's go over today's news. Tuesday, June 30th, we had a lot of news coming out of Europe. You can see a lot of low impact news throughout the evening in Europe. Now we're coming into the North American session, which already happened. So we had the 8:30 Canadian news. We moved into the US at 9. Wall Street market opened up. We had the 10 a.m. consumer confidence report, came out rather low, 91.2. It's like 3 points below the forecast. So maybe consumers are losing little confidence in how everything is running in the US. Jolt's job openings came out, good number, 7.59 million, which was exceeding their forecast, and it was on par with the last Jolts of the last month. So that came out, and guys, whenever I see Jolts, job openings, labor turnover, early in the week, I know that then there has to be an NFP, non-farm payroll, coming at the end of this week. But since Friday is a US bank holiday for Independence Day, the NFP, normally the first Friday of every month, is scheduled for Thursday at 8:30. Okay, guys, so please be aware of that. Okay, Thursday at 8:30, lots of volatility and high impact news. Okay, so when we move into tomorrow, guys, again, lots of news coming out of Europe. All day tomorrow is a bank holiday in Canada. It's Canada Day tomorrow. So if you are Canadian, we wish you a happy Canada Day, and hope you guys enjoy your day off tomorrow. As we move more into 9 a.m., US is open. Their banks are open. They're not closed. They'll be closed on Friday. We do have Fed Chairman Warsh speaking tomorrow at 9 a.m. High impact. Could be talking about monetary policy. So please be careful trading at this time. And this is 30 minutes right before Wall Street. Okay. And at 10 a.m. we have our ISM US manufacturing PMI report. High impact. Be careful at this time as well, okay? And then we'll come in just after they release all of these folders, and we'll do the post-New York session tomorrow around the same time, okay? And then you move into Thursday. This is the biggest day of the week and one of the biggest days of the month. It's the non-farm payroll, average hourly earnings, non-farm employment change. The forecast is already set at 110,000, which is a lot lower than the previous actual numbers that came out last month. And we also have our unemployment rate and our weekly unemployment claims. All will be released at the same time at 8:30. So this will be highly volatile. This is where I would recommend everybody on this call, including myself, lowers your risk during this time. If you are going to consider taking a trade, maybe wait for all of the news to release, let the volatility happen, let the move happen, and then analyze after and see, is there a trend that you can identify? Is it whipsaw, sideways action, very erratic? Then maybe stay out of it. If you're speculating whether to take a buy or sell, maybe go in very, very small with a feeler trade and test it out. If everything meets your requirements, then maybe then you can start to utilize a larger size, okay? But please be careful. And then going into Friday, again, there's a little news coming out of Europe if you're going to trade. And then the major news is US banks are closed on Friday. So there's going to be very limited volume, high spreads. Institutions, banks are not trading. So I suggest you also take the day off. We are taking the day off here at SST. We're going to go to the beach that day. There's no point in trading and stressing yourself out when there's no good moves to be made. And we'll be back Monday morning. Okay. So there is little news here. Dollar yen briefly sees sharp drop. Suspected JPY intervention over there if you're trading the USD JPY. Guys, just our news right now. Techs go on a tear in the first half. No thanks to the Magnificent Seven. So tech stocks are heading for the strongest first half gains since 2023, even as big tech players get punished for high AI spending. Right now, the stocks rise as Wall Street eyes a standout quarter. US dollar surges to 2026 high amid yen collapse. Job openings top expectations in first key labor test. Chip stocks, best quarter ever, ending with some wild swings. Bitcoin eyes its worst month in 4 years, as analyst says there could be a $40,000 Bitcoin play coming in the near future. There was some news about MicroStrategy and Michael Saylor about his new playbook that he's doing now. He's opening up some Bitcoin reserves. The market saw it as good news yesterday. It was up 12%, and today it's almost gave everything back, down 8%. So if you're looking into what's going on with Bitcoin and crypto, you might look into MicroStrategy as well, because they are one of the biggest accumulators of Bitcoin on the planet. Nvidia is always in the news. Why Nvidia stock is enduring the summer swoon. What else we got going on here? How Microsoft became the black sheep of the AI trade. There's lots of articles here if you want to read. A lot of it has to do with tech. We can see over here, okay? And Bitcoin, what I can see right now, is down to 58,000 right now. So there's it can continue to move down, but it needs to find that nice support, and not just a 5-minute support or an hourly support. It needs to find monthly or yearly support to sustain a move back up, okay? So if you do your top-down analysis, start off on the monthly, work your way down to the weekly, and then get into the daily, okay? Right now, there is a little tiny bit of green in the markets. S&P 500 is up 0.4%. Dow is up 0.2%. And NASDAQ is leading the way, almost up 1% at 0.8. Russell, 0.1. Volatility is down, -3%. So markets can sustain some green. Gold is up almost 1% as well, okay? And just moving forward, guys, we have a free Telegram channel. It's pinned at the top for everybody on YouTube. Thank you, guys. 200 viewers. If you guys can kindly hit the like button right now, subscribe to the channel if you're not subscribed, so you can join us on a daily basis and analyze the markets with us, potentially look for a trade like yesterday. Guys, yesterday we got into a buy on gold. It hit approximately 100 pips, where I scaled out 80%, left 20% running. After that, my computer shut down. It completely crashed. So I apologize, guys, if you were on YouTube and Zoom and you guys saw that it just crashed. My computer crashed. I tried to get it started and I couldn't get it started in time for Wall Street. So hopefully, we don't have any interruptions again, but luckily it happened right after the trade. Okay. And guys, just continuing here. Dave also sends out signals also when he's doing live New York's as well. We have signal service as well here. So we give it not just a signal, just a buy or sell. There is a chart, but there is trade management and some sort of analysis regarding why there's a buy or sell setup. So if you need some type of help with some signals or alerts to help your trading, we offer those here as well at SST. And guys, when you're subscribed to this Telegram, you get all of the upcoming links to all of our YouTube sessions and all of the giveaways. So huge congratulations to Coloni Fab of last week, who won the Ultimate Trading Giveaway. He got 1 month of AI trade ideas and 1 month of Stock Sniper trading with us. So congratulations, Kalani. And we'll have another winner coming up, but you got to be subscribed to this free Telegram and to the AI trade ideas. That's the free Telegram, guys. If you want to join the team, we've had some questions about joining the team, getting in on the Discord, going over all of our education with the blogs, with the courses, with the tutorials, with the boot camps, with the webinars. Lots of education on the website, all of the live sessions as well on the Zoom with myself and Dave, and of all the indicators, and everything that we offer here at SST, all the trade signals. You can sign up on our website, okay? And if you want the free blogs right over here, you can get all of the free blogs, okay? And guys, thank you. Let's get started. We're above 100,000 subs, which was a dream come true over here. And now we're at 103. So thank you guys so much to every one of you guys that hit the subscribe button, that hit the like button, that shared our videos. We do appreciate you guys. And thank you guys so much. I promise you, when you hit the subscribe button, we will do everything in our power to help educate you in the stock markets and help make you a better trader. You guys are already great traders. And so maybe we can trade together, as a team, and you can provide your insight, you can provide your thoughts, your bias, and we can work together as a team, as on YouTube and everyone on Zoom. We work together and we look for a similar bias so that we can be on the same page at trading, okay? And thank you to everyone that's hit the subscribe button, okay? So I'm getting into it now. I'm on the charts. I'm on gold, XAUUSD. This is how it's moving on the 5 minutes. So there was a nice move at just after 10 a.m. that started this bullish run. And there it is again. There's that, guys, here's a good education lesson for everybody, okay? If there's a time to pay attention on this call, this is when you pay attention right now, okay? I know a lot of you guys are just saying, Ron, are we buying or selling? Are we buying or selling? You decide what you want to do, buy or sell. I'm going to educate. I want to teach everyone to recognize this and please learn from this. Because when you learn from this, it can change the entire perspective of how you're trading, okay? Just ask yourself, I always say, ask yourself, how is this possible? Look at this big bullish candle that closed right there. There's the wick and there's the close. So even if you measure that wick, it's going to be really small, okay? It's a 6 to 7 pip wick, 6, 7, okay? 6, 7, not even 1 pip up there, okay? Look at how small that move is. And look at now how this candle opened. Ask yourself, how did it not open blue and bullish and take out that tiny wick and create a new high? See, this is the importance of understanding what a bearish ignited candle is. I named it ignited, okay? You're not going to find it on Google. You're not going to go look for it anywhere. It's ignited, okay? I don't know how I came up with that name, but it's ignited. And then I use this as a firecracker approach where it's a small wick. And if this opened blue, it would have filled that and continued to drive up to the next resistance. This is a clue that the sellers are stepping in, okay? Does it always happen? No, but that's why you have to identify clues. Look at how it opened bearish ignited and the sellers were in full control at 1025, bringing it down, bringing it down, bringing it down, bringing it down. And look at where they closed. They closed it below 50% of that blue candle right over here. I'm going to place a line here. Okay. Sorry, I will do the top-down analysis, but you guys need to learn this, okay? And look at how it closed below, and then the next candle right here opened, and it came up blue, 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 just above, here, but it's targeting 50% of the black candle. And now it got rejected, and then now you can start to see lower highs, new lower lows, lower highs, and now we're kind of fizzling off. Sellers are not pushing it down. Now we're consolidating. So now there could be an opportunity where buyers will step in if the sellers cannot continue to push it down. And then we might see another leg of blue volume coming back up. But when it comes back up, then we could have like a potential double top situation where you can start to draw like a red zone right there and draw it across. You see how I do this? This can be done on any time frame. This can be a daily. This could be a daily candle close, and this could be a new daily candle open. And then you have multiple days where a bear trend is starting. These could be 4-hour candles. Then you could set yourself up for maybe a swing sell situation. These, in fact, are 5-minute candles. But you guys understand this, okay? Some of you guys don't care about this. That's fine. But for those that are here to learn, will make you, I swear to God, this will change the game of trading for you. You will start to analyze the markets in a different perspective. If you always wanted to buy highs and then you see this, it maybe will stop you from buying highs and maybe consider selling the market, right? And then if you see this, if you're don't want to sell, maybe you stop buying, but then now you could position yourself to buy a nice healthy pullback like we did yesterday. It moved up. We didn't take the FOMO buy. We waited for it to correct itself and come back to the area of support. Then it bounced up for about 100 pips. Okay. So does that make sense, guys? Maybe I'm talking to you guys on Zoom. Maybe, but I am talking to you guys on YouTube, but some of you guys don't pay attention. Some of you guys don't care when I analyze that. All you guys are worried about is if we're buying or selling, right? I'm not a buy-sell signal. I'm not a buy-sell channel, okay? I'm a educator. I want to teach price action. That's my job here. If there is a trade, great, but I'm here to teach you guys how to trade, okay? You guys got it on Zoom? Perfect. Okay. And welcome everyone. Mahedi, good morning. Forex Borix, welcome. Thank you for joining. Welcome. Hopefully everything is going well with you. Tulumi, thank you for joining. Forex, you're overexposed on Misty. You need to figure that out. We had some good wins on gold today in the channel. Yeah, I think they upped the dividend to 12% right now, and he's making a reserve of like 2.5 billion US dollars that will cover the dividends for the next 2 years. I believe I didn't read everything into it, what he's trying to do, but it's good. He needs to do something like that. You can't just accumulate Bitcoin in a bear market and hope that it goes up. So you got to have some sort of backup plan, which he is doing now. So maybe some investors are seeing that, and we'll see how it plays out. Okay. Vinay, welcome. Mike, thank you for joining. Both Mikes, Mike Farabee and Mike Rodotis, welcome. And Timmy, thank you guys. And everyone on YouTube from the top as well, thank you guys for joining. Who do we got? We got Kwang, sorry if I pronounced that wrong. Welcome. Good morning. Pros, welcome. Thank you. I appreciate it. Yeah, we did the new stream starting, so I hope you guys enjoy it. And everyone on YouTube, thank you guys. We appreciate you guys. Okay. And let's get into this now. Now I'm going to start to go from the daily. Okay. So, and you see it's coming down, and you guys might be in a buy, you guys could be in a sell, or you guys could be waiting. I'm going to start on the daily and start analyzing. Okay. So we're starting on the daily. You see they're candlesticks. They're blue ones and black ones too. And some have big wicks, some have low wicks. Sometimes the daily candles were consolidating, but right now we can see we are trending down. Okay. How do I know that? Because I have two eyes and I can see clearly. How do I see it's a downtrend? Well, that was the all-time high wick. And then if I just bring it down, remember I told you guys last week, I like to hug people. I'm a hugger. So I like to hug bodies. So I started from the all-time high wick. I can go to the wick, but then I have to keep it consistent. And that would be the wick trend line. Okay. I don't personally like to do that. I like to hug the bodies. Just like if I see you in person, I'm going to come up to you and I'm going to give you a big hug. I'm a hugger. So hug the bodies. You're hugging the volume. That's more important than just a wick. That could be an impulse move and nothing really happened up there, because the wicks, as you guys know, if you use a volume profile, all wicks are basically on low volume. They're low volume moves that just scoop liquidity. Okay. The real real true volume is where the bodies open and close, okay? So you see now, when I hug the bodies right there, now I continue to stretch it out. Look at, then I get a wick, then I get a wick, then I get a body, then I get another wick, then I get another wick, then I get another wick. And I'm continuing to stretch it into the future. And that's how you can see we are in a downtrend, current downtrend. But overall, we are in an uptrend. If we talk from trading from 2025, you can see it's coming up to the all-time high, and then now we're pulling back. This could be a healthy pullback of gold where it could continue to break out and go bullish, right? But we have to acknowledge that there is a downtrend coming down, okay? And if you are buying, you are counter buying this trend right now, okay? You can ask these daily buyers right here that bought for 3 days, and then the market came right back down. You can ask these daily buyers just a few days ago that bought, and then the market is coming right back down, okay? And then you can still see that there is some buyers on today's spin top candle, okay? So just moving from the trend line, acknowledge where the all-time high is, okay? Mark it up on your charts so you know how far away we are from the all-time high. You can see how the sellers have been offering here, offering here, offering here, offering here, offering here, and offering over here. And there's consistent lower highs in the market with new lower lows. Okay. Do we have some points of interest? Now, yes, I can chart up here in the all-time high territory, but we got to get more into what's going on over here. So just some obvious levels, okay? For education, this is an obvious level of a point of interest. You can have this every single day on your chart because it's the same on every single day when you analyze the markets. The market came up there and got rejected right there. You can clearly see it. I'll even draw the red zone to help you identify and see it, okay? So there's a block below the all-time high and still trending down. If you want to have an alert in there, you can right-click, add an alert. If it ever comes back in there, maybe we trade off that block. But you can see how much gold still has to do. It's got to break the trend line. It's got to fill some wicks. It's got to get into this consolidation. It's got a long way to get up there. But when it comes up there, it could be rejected right back down, okay? So that's why I placed an alert. I don't know how long it will take to come up there. Maybe it takes tomorrow, maybe next week, maybe 1 year from now, maybe 5 years, maybe it never comes back up there. Who knows, okay? But we don't know these things in trading. All we can know is how to chart, analyze, place alerts, and wait for the volume to come to us. But that's a zone above us. We still can start to dissect what's going on now below us. Here was a nice obvious pivot, okay? And if you don't understand what a pivot is, it's where the market kind of bottoms out. It's where it stops. So you see this big black candles coming down, and then they stop right here, and then they pivot, and then they go back up. Here's another pivot where the blue candles stop up here, and then they pivot down. Here's another pivot right here where it stops, and then they go back up. So at each one of these pivot points, that's where I draw a yellow line, and I call it either a pivot or a point of interest. You call it whatever you want, okay? I'm not here to tell you what to call it. You can call it a line. You can call it a yellow line, whatever you want to call it. But I just understand that that's an area of support on a daily that a lot of candles traded there, right? On the daily. So then when I'm scalping the lower time frames, I can look for my setups at these locations. And you can see right there when it was support. And then all you need is a confirmation body to break it and close below it, and then see how the same yellow line turns to resistance, resistance, and resistance. And then now it's pushing down. So that's how you can trade off of it. You could buy off of this yellow line right there, but then as soon as it invalidates and closes below, you could be selling there, you could be selling there, you could be selling there, and you could be selling there, and look at the results. You're making money. If you were buying every time it came up to that yellow line without a closure, you're losing money, okay? That's the facts of the game. I can't make this up. That's the chart, okay? And then if you want to back test and verify, go backwards, and you will see this same yellow line. That's a pivot of support right there where it created a double bottom, and we all know that that was that Donald Trump liquidation candle. I don't have to keep talking about this every single day. We traded it live, and you probably, if you've watched one of our top-down analysis videos, you know what I'm talking about on that candle. But go backwards. This is how you backtest this strategy, this theory. Look at right there. That right there. There's a wick, a wick, a wick. That was the previous all-time high of gold at that exact yellow line. There's where you could have had a zone, and then that's when you stretch it into the future. There's your first blue candle that closed above. That's when you go through the process. You flip your zone green, stretch it into the future. If you bought the FOMO, okay, that's great. But if you bought up there at the highest point, then a big liquidation candle came and probably stopped you out. And then there was patient buyers that waited a few days later and got in right back in that green zone. This was basically the same trade we took on the 5 minutes yesterday. It broke out, it closed. We let it go for about 20 minutes. It went up 100 pips, and then it came right back down to our area where we bought. And then but it consolidated like this, similar flag, and then it broke out bullish. But once it got right up to the next double top, that's when it came back down, because we got to respect the tops and the bottoms. Okay, so stretch this into the future, stretch it into the future. And then you can see when it broke, it grabbed the liquidity and it came right back up. That was a big impulsive daily bearish candle where Donald Trump tweeted at 7:03, said the Strait of Hormuz was open on this day right here, Monday, March 23. You can go back and verify this. We traded it live, so I'm not making this up. And then you follow your patterns. This is an A+ setup on any time frame. It came down, grabbed the liquidity, closed above. There's where it came back up. There's wick, 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 wick. So there's got to be a neckline right there. And then it came back down, double bottom. There's your W. There's the W with the second bottom. Traditionally has more volume. There's your breakout, but it didn't break out to the all-time high. Why? Because the sellers are right there offering, pushing it right back down. As it came up with the higher low, then it got a lower high. Then it consolidated through here. And then there's that NFP Friday, June 5th, that closed below. There's our next move down. We found a pivot point right there. Okay, so there's your next pivot. That's where the market stopped, 4,070. And then it bounced right back up. So right there, you can see the yellow line has multiple wicks and some bodies of interest. So you can draw a red zone. Look how nice, neatly you can have a nice red zone, exactly the size of the bodies. So you're not guessing. I'm not guessing there. You see what I'm doing? I'm just dragging it from the yellow line to the body, a body, and a body. And now this is the hardest part. Stretch it into the future, guys. I'm basically teaching you guys how to do your own analysis and how you guys can do your own trading. And see the yellow line now? Add an alert there. Okay, so you see now we're coming down, we're coming down, we're coming down. We are consolidating the volume as much as we can. So first of all, see, we're struggling at this yellow line. So how can we buy when on the daily when it can't even close above there? So we got to get a blue candle to close above that yellow line so it can come back and use it as support to take us back up to the trend line, maybe up to the red zone. Okay, and you can see how, look at where I'm going from the top down, all-time high. This block, see, this was green, green, green. But now, you see, with that black candle on NFP Friday, close below, now that block is red. Okay, same zone, but see how I flipped the color now? Okay, so now let's just continue going. Now we have like some more support that we're consolidating right here. Is there a pivot right here? Excuse me. See right here? We've got a body close and a body open. Now I've got a wick, and a wick. Okay, look at today. They took out the lows. They created a new lower low, but now it's coming right back up. So you can see we might be forming like a double bottom in here as well. Okay, it came down. There's the neckline. We broke, we grabbed some liquidity, but we got to follow how this daily candle will close. What if it's bullish, 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 and we close above today? Then you see we're breaking. Then maybe tomorrow and the next day for NFP, gold could be bullish, coming right back up. See right now how the volume now on the daily is consolidating right in between here. So like if this was a 5 minutes and we go into the 5 minutes and I saw this, I would be like, guys, we're not trading this. This is consolidation. We see that there's sellers selling. We see there's buyers buying. Sellers are selling. Sellers sold, and now buyers are buying. Okay, you can see it. It's not going to stay in this zone forever. Where we know that gold is eventually, we see the buyers buying, they could close it above and retest this. Then for next few days or next week, it could break out bullish. Okay, remember there's options in trading. That's an option 1. There's option 2 that, see, the sellers broke a low. They did some damage. They did create a lower low. So if they bring it now back down black and close it below here, it could retest this. And then they continue filling that wick and dropping it down, right? That's option 2. The only third other option in trading is we continue to stay inside this zone where sellers are selling, buyers are buying. Sellers are selling, buyers are buying. Maybe tomorrow sellers are selling, maybe next day buyers are buying. But eventually this volume is going to have to come out of here, okay? It's like when you pour coffee in a cup, right? If you got a coffee mug and you keep pouring coffee, when it gets to the top, it's going to spill. It's going to spill out. There's nowhere. Same with, what is this? This is volume, right? Coffee is volume. Water is volume. If you put it in a cup and you keep pouring water, it will eventually spill. So we want to see, in an analogy I'm using, will the volume spill to the upside or spill to the downside? Right now, it's just still filling. The cup is still filling, okay? Make sense? Maybe a silly analogy, but I didn't have my coffee this morning, so I'm thinking about coffee right now. Okay, so now let's follow. Yesterday was a bearish day. Let's verify. Yesterday opened, it was bullish. Did the buyers yesterday do their job? It came up. Did they fill Friday's wick? No. Okay, so that's number one. Let's just walk this through with me. Okay, we're saying, did the buyers do their job? The answer is no. Okay, and then they pushed down. Now the sellers were in control yesterday. They came down, black, 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 black. That was the lowest point. Did the sellers yesterday do their job and fill Friday's low wick? No. Then it came back up and we closed right there. The only thing that we can say for yesterday was we had a bearish engulfed candle that engulfed Friday's blue volume. That's it. But there's context of where an engulfing candle happens. Like right now, we're in a zone. So yes, you'll see bullish or bearish engulfing candles. It's nice to see, but there's context involved as where these things can close. If this thing was bearish, 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 and engulfed everything and closed below here and closed below this volume, then we would have a structural bearish engulfed candle. That's a different story. That's one I would base a point of control off of, and that could lead further to the downtrend. But yes, we had some sellers yesterday, but it didn't create the low and it closed. Okay, so let's follow now the close and the open of today. There's the close and the open. Okay, so let's draw a line right there. Okay, 4,015. I'll even write on it. Okay, so you guys can write on your charts as well. So this is today's opening balance. Okay, today's opening, whatever you want to call it. I like to use the word balance. I don't know why. Okay, this is today's opening balance, right? Open. Remember, candles all have an, up here was the opening, that was the high, that was the low, and that was the close. All candlesticks have an OHLC, but some don't have wicks. Remember, some are ignited. Then the ignited open is the lowest or highest point, depending if it's a bullish or bearish ignited open. Okay, so we did open there. Now, let's see who was in control today. The sellers, upon open, were in control. It was black. How do I know that? Because I can follow the wick. It came down, black, black, black. They took out yesterday's low. It continued black, black, black. They took out Friday's low. It came black, black, black. They took out Thursday's low of last week. It was black, black, black. We took out Wednesday's low of last week, okay? And then we created a new lower low today. So that's our lowest point today. That's why I draw a purple line, okay? And then I look at the number, 3,942. So we broke below 4,000. We broke right at that 39.50, and it came right to 39.40. And what happened there? Then it whipsawed right back up. It got rejected and it came back up and it came back up and it came back up, back to the opening balance. And then the candle today flipped blue, where the buyers were in control, where the candle was blue, 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 blue. And look at our high of the day. It is right below yesterday's opening balance. Remember, I always say, guys, the opening is more important than anything. The opening and the closing of each candle is the most important. So the way how I look at this and the way how I analyze it, so, you know, if you say, Ron, you're wrong or you're whatever, I don't care. This is the way how I personally analyze it. So this is how my brain works. I say to myself, whoever sold yesterday's volume, okay, is still protecting their position with a lower high. Does that make sense? It makes sense to me. I don't know if it makes sense to you. Someone's going to say, Ron, no, that makes absolutely no sense. That's fine. I don't care. I'm not disputing you. I know how I make my money every single day. And that continues to tell me that these sellers are still in control. Even that little tiny bit of opening volume right there, even if I draw a red zone to illustrate it to you, I'm showing you that whoever sold yesterday's opening range, and when this big blue candle came right there, then you tell me, you give me your narrative. Why did these buyers not get to come up to the opening balance and fill that wick? Because there was offers right there. And who is offering? It's got to be these sellers who are protecting their position. Because if it goes above here, their stop loss is above the wick or higher. Am I correct, or am I right or am I right? I don't know. You guys tell me. But I watch candlesticks on 1 minute and 5 minutes, and I see how they react. Daily is no different to me. It's just I don't have the patience to sit and hold trades for multiple days when I can scalp and get my daily goal out of the markets in a few hours of trading. Okay, so regardless, whatever you think, we got to talk. Candlesticks are the ones that talk. It's got a lower high, and the buyers failed to come up, and now the sellers from here came in, and look at, they're exhausting that blue volume all the way down to here. So what type of candle do we have right now with 5.5 hours to go? We've got a bullish pin bar with just this much bullish volume just left above the opening balance. So yes, it could continue to come back up blue, 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 but it's got to fill that wick and then potentially break out. So if you want to know if it does come up there and how high it can go, well, if you're a scalper, if it comes all the way back up here and breaks out, number one, we got to come back to yesterday's bearish open, 4,070. And then if the buyers do their job, they will continue to fill the wick. So this is where you can draw a yellow line. So you know exactly where your next daily point of interest is. It's right there, right? And then if it goes higher, you know your next daily point of interest. It's Friday's high. And then if it comes higher, right there, there's a body and a body, a transition. And that would be this one. I would hold more weight than this wick or this wick. Why? Because this is an opening candle of bearish volume. That whole day, that was Wednesday, June 24, where it dropped. Okay. Does that make sense, guys? Anything I'm saying, does it correlate with anything that is ringing in your brain or nothing right now? If it is, hit the like on YouTube and let me know. Like, I know from likes. Yesterday there was a shit ton of likes. So whatever we did on yesterday's call, I saw that you guys really enjoyed it because there was over 400 likes on yesterday's call. So that helps me understand when we're analyzing live trading, you guys know what's going on. It helps me so much. Okay. It's nice for the YouTube channel as well, but more so it helps me to understand that you guys, whatever we're doing, you guys appreciate it and learning. If you guys didn't care what I was doing, there would be 0 likes on the call and I wouldn't be here any longer. Okay. So you guys are basically telling me, Ron, stay here or don't be here. Okay. And if there's no likes, you know, this to me is just a waste of time because I know all about this. I don't need to continue to teach myself every single day about open, high, low, close and the importance of watching candlesticks. I want to teach this to traders that don't know about this, okay, that want to learn price action and want to learn for free, okay? There's probably a lot of traders that charge a lot of money to teach you this, even if they can teach you this. I was self-taught. I learned this all myself. There's a lot of traders, streamers that Dave and I teach that are on YouTube and have a big following, and we teach them in private one-on-ones about price action. So that's what we do here, okay? Now what I'm going to do, guys, this is where now you really have to pay attention, okay? I'm now dissecting this daily candle. We've done enough daily analysis, okay? For now, you can continue and go further. Okay. If you want to continue, see the purple line, go backwards, and then there it is. See the double bottom right there. Okay. We talked about this early last week. There's the double bottom back in November, and that's when it came up. So you see right below the purple line, today's low, see there's a bodies. That's where your zone is right there. Look, if you don't believe me, then don't believe me, but there it is. You see, there was the double bottom. There's the body point of interest. That's again where it came in. There was the liquidity grab right there. Okay, so you can see, guys, this is your A+ setup on any time frame. I told you guys the other day, take a screenshot of this. This is how you'll make your money on a daily basis when you see this pattern. Let's just go over this just to reiterate, to remind everyone. You guys know a double bottom. It comes down one time, okay? Buyers bought the first bottom, a V bottom recovery, came back up. There's the neckline. Why? Because it's got a powerful bearish candle and it's in a downtrend. So that's all it came. It was like a counter buy coming up. The sellers are there and they're trying to push it back down to create a new lower low. But the buyers who bought right there are coming in, protecting their position. That's what's called a double bottom. It's very basic. It looks like a capital W. And then what I say is the second bottom traditionally has more volume. Why? It just makes mathematical sense. There's more buyers. There could be more pending orders, okay? Not the first time it couldn't break. So then a second time they add multiple orders. Then does it always happen? No, but it's got a higher probability. Trading is all about probabilities, right? It's all about probabilities and mathematics. It's not about guarantees. Nothing is guaranteed in trading. What we trade is high probable setups, okay? I need the rookies, I need the beginners to understand this. And we'll save you years and years of trading. We're looking for high probable setups. So when you guys are begging me every single day, Ron, are we buying or selling in a consolidation zone? You guys know what my answer is going to be. It's going to be no, I'm not buying or selling anything. I'm waiting. It's not in a high probable zone to take a trade. It's in a speculating zone. It's in an accumulation zone. I don't feel like accumulating. I'll wait for a clue like this. So there's the double bottom, and then there's the traditional look at the second bottom is the leg that broke through there, okay? And then now it's got the next piece of the puzzle. It's got the liquidity grab where they broke it right there, and there's the wick, right? So they spiked it, they grabbed the liquidity, the first leg came up, then it came down, second bottom protected it, and there was the move to come up. That's a very easy trade to take. Whether you take this on a 1 minute, 5 minute, 15 minute, hourly, daily, 4 hour, monthly, or weekly, candlesticks have the same characteristics. Look for this setup all the time. And the opposite is bearish if it's an M top with the liquidity grab, okay? Now, let's stretch that zone into the future. Let's stretch it all the way into the future. And you can see, look at today, okay? So does that surprise me that today's low is right there, right above that green block right there? Did anybody analyze this? I did this for us early in the week. But you see, guys, how it's still holding up. So stretch that green zone into the future. It's still holding, okay? Now, let's go from the daily into the hourly. Let's see where we got some hourly volume, okay? When? These are hourly candles now, okay? You can see they're the same thing. Here's some shitty spin tops for 4 hours. Right here, 3 p.m., 4 p.m., here's 6 p.m. and 7 p.m. The market was trading sideways. If you traded this 4-hour window, unfortunately, it was the most frustrating 4 hours of your life. It moved absolutely nowhere. Sometimes that happens in trading. Sometimes we trade for a 2-hour window and we get stuck with shitty volume. And I'm trying to force trades to make you guys happy, and I'm not going to do that anymore because it's just stupid, okay? And now this is when the volume came in. Look at this big bearish ignited candle. When? Look at time and sales. Futures market, 8 p.m. That's when they dropped it right there. Monday came all the way down. Now I can see Monday at 9 p.m. is when we created that low. Did anyone trade the futures market last night? It was unbelievable. I scalped for 5 minutes and I made 200 pips. It was so easy to trade last night in the futures. I'm going to literally say that. It was so easy that our kids could have made 200 pips last night. If you just followed the bearish 5-minute candles and waited for one little retracement in all of that bearish volume. It was, I don't know, maybe you guys tell me, did you guys trade the futures last night? I had an alert and I just followed my alert. It came right to my support that flipped to resistance and I sold the wick off of it. Made 200 pips and just a little in 10 minutes on this drop. That's what created the lowest point of the day was 9 p.m. Now, look, there's hourly support right there. There's a body and a body, okay? So this is what I do now. Now I go into the hourly, so I use a new colored line. I use a white line, okay? This is going to throw some of you guys off. If this is your first time on this channel, you guys are going to probably say, what the hell is this guy doing? He's got yellow lines, purple lines, green boxes, and red boxes. But now I know why, because I've been doing this for a few years now. The white line represents hourly support. See how I'm dissecting the hourly candles? So I can see that was the liquidity grab at 9 p.m. Then it came 10 p.m. close. There's 11 p.m. And since then, look at, we've been there's consolidation, right? Sometimes it takes 2 bars to understand. There, you can box in those bodies and look at, you can draw a zone. So this is my hourly support below this daily zone, okay? Because if it comes down here, I might be able to look to entertain a buy. But if it comes deeper, remember, the deeper is a deeper depth of analysis. It's stronger buy. So at this white line, what am I going to do? I'm going to place an alert, okay? We're all the way up here, okay? But what happens if the market comes down there? That could be the hourly double bottom. Do you not see it? Or is it just me? Right there was the V bottom, right? There's the neckline, look at, okay? And there's the liquidity grab. So all we need, remember I just told you on that daily, this pattern to happen. See, there's where they spike the liquidity. There's where it's building the base, okay? There's the rally coming back up. But you see now, it's kind of, here's our neckline. This is our hourly neckline. How do I see that? Because you can clearly see it, okay? That's the hourly neckline. I'll explain it. Guys, that's the thing with me. I don't just put lines on the chart and just hope that you guys understand why I'm putting there. I clearly explain why I'm putting a line there. Look, okay, this is a serious candle at 10 a.m. today. There was some serious US news, okay? It came up bullish, bullish, bullish. That's the highest point of the day. And look at how sharp the rejection wick is. It got rejected, and look at where it closed. This is where now our hourly candle is opening. Look backwards. There's a wick rejected at 7 a.m. and there's a wick rejected at 4 a.m. Look backwards. Look backwards. Cut that black candle in half. The white line does everything for you, okay? You know what I mean? You can go backwards, okay? And this is how you're back testing, right? Look at there. It kind of cut that blue candle in half, and that's what turned it to support. So the only thing that moves is variable is the volume, okay? So you can see that is our hourly neckline. Now I can start to predict what could happen here on the hourly. There's the big move came down. There's the V bottom recovery. Holy shit. At 3 a.m. London, there was a massive bullish volume, and now that's where we're getting rejected right now. So you see, this is shitty hourly candles right now, but if it closes above here, we might retest this, and then we got a job to do. We got to continue to backfill that massive wick, but that's a long wick. But there's 2 other wicks right there. So, and look at how it cuts it in half. Look, guys, 50% probabilities and 50% psychology is everything in trading. Look at the yellow, watch, I'll do it for you with the Fibonacci. Look, the white line to today's highest point of the day. Look, okay? Now, where's 50%? Right there. Look at the number, guys. Okay. I know I get excited on these calls because everything is lining up to what I've been teaching here for over 6 years on YouTube for free. Look. And then you guys tell me, is this a coincidence, or this is just by luck, or this is by how markets work? You guys tell me. Look at what I just did. I just cut from the white line to today's high. I used the Fibonacci, so I'm not guessing. There's 0.5. Exactly. Look at the number. 4,050 on the dot, okay? You explain that to me. I'm not a market maker, but I'm onto these guys. I know how they operate, okay? And then look backwards. Look at what it came into, a wick and a wick. So there's your zone right there. You know, there's your hidden hourly block in the market. You go a little bit above, a little bit below, there's your zone, right? And then I can go backwards and say, oh, okay, this shit makes serious now. It makes sense now. Look at where it came in, and then they rejected it. Look at where it came in, they rejected it. Look at where it came in, they rejected it. Look at today, how it spiked, grabbed liquidity, and is shot back down. So if we're coming back up, we're coming right back in that same red zone. And what could happen there is it could get rejected right back down, okay? If they close above, okay, no worries. Then what I do is I confirm that the buyers close above, and then I change that zone to green. I invert it, and then it could fill the rest of the wick, and then we're driving through the next zone, okay? Do you guys understand that? So I'm going to leave that how it is. So we have that zone above us. And if you say to me, Ron, where did you get that from? I just explained it clearly where I got it from. Okay. Some of you guys pay attention. Some of you guys are sleeping on this call. I can't help for those that are sleeping. For those that are paying attention, remember, I always say, if there's something important, I say to you guys, I remind you, I say, pay attention right now. Okay. Now you don't have to pay attention anymore. Now you can go back to sleep, because now we're just going to dissect the last hourly candle. Okay. So what happened? Big move at 10 a.m. It came up. Did the buyers do their job? Continue to fill that wick? No. Lower high. Did the sellers do their job? Look at what the sellers just drove into. 50% of this blue candle, and it's still holding, okay? Now, if you want to see, there was our opening balance. This is our hourly range right now. So look, it's coming up, it's going back down. It's coming up. There was an M. Look at it, M, and look at the fake out. Oh my God. Guys, did I not just explain this? To look at the fake out. How do you guys get faked out? Watch, I'll show you how they faked out the sellers today. And everyone's going to say, oh, Ron, it's easy to identify this when the candle forms. Good, good. I want it to be easy when the candle forms, because when you see this, then you're going to know. So I'm not doing this like, guys, look. I'll explain it, and then maybe it will go through your head as well. Look, this was a black candle, M top. It came up, back down, right there. Here's the M coming down. Black. Look, it closed below. This is a structural candle, okay? It's everything I look for. It closed right near the lowest point. Now, this is where I say, ask yourself, with all of that bear volume, M candle closed below the opening balance. This is where the market should have flipped bearish, okay? But look, ask yourself, look how small that wick is. How? The transition into 9 a.m. How did this candle not open black and just fill that tiny wick to create a new low? Look at it. Pay attention, guys. It came down, and draw a line if you have to. If you think I'm making this shit up, draw a line. Look at that wick, okay? Did it break this wick? The answer is no. There's no if, ands, or buts, or I'm trying to trick you. The answer is no, okay? And there's where you know that the market that's a fake out right there. They faked those sellers right there. That's it. It came in, and they took the liquidity below the opening balance and then brought it right back up. Now let's follow this blue hourly volume. Look at where it came up to right up to almost the opening balance. Those sellers who sold at 8 a.m. continued to offer and close it right there, okay? So this is a strong bullish candle, okay? Is it a structural candle? No, because it didn't close above all of this, above this wicks right here, okay? So what I would do is, number one, that was a structural bearish candle. Follow what I'm doing, guys, okay? Did it close below this? Yes. So what I do with that candle is, that's the candle I identify a point of control off of. Watch how I do this, okay? Because for some of you guys, this is a great summary for some of you guys. Look at what I just did from the open to the close. Why did I pull out my Fibonacci on this black candle? Reason being, because this is a bearish structural candle that came down, closed below this pivot right here, and closed below today's opening balance. So first thing I do with that candle is, I'm looking to sell off of it. Where am I looking to sell off of it? At 50% right there, okay? And if I grab a point of control of it right there too, so I make it red. Now, going into the next bar, remember the next bar dictates the direction. Look at when it opened. I just clearly showed you it didn't break. Now the buyers are coming up. Buy. When it comes into right there, is there a wick rejecting this volume to come back down? Then I take the sell, just like a 5-minute setup. No, look at how strong the buyers were. They closed it above this point of control. So what do? I flip it now to illustrate that the buyers have the control. So I make that same zone green. Okay, I based it off of the black candle, but the blue candle at close is showing me it's green. Now, look it. I stretch it into the future. Now, look it. Tell me. Look at where it came down. It bounced right off of there. It came into, look at, right now, 50% of the green zone, and it's bouncing off. So this is now an inverted hourly green zone, protecting today's opening balance. Okay? Does that make sense? I don't know if it makes sense to me. Okay? I don't know how else to explain it, but this is how I learned how to do this. If anyone asks me, Ron, how did you learn how to do this? This is exactly, guys, I'm teaching you exactly what took me 20 years of my life to learn. And when you learn this, it will change the game for you. Did you see? I'm not using any fancy words. I'm not using any institutional words. I'm just using basic shit, whatever you want to call it, okay? Now, we got good support, but asking for buyers. Look at what we still have to do. We still have to backfill this massive wick, okay? So yes, we might break out a little bit, but we still have to respect this red zone that I just put up here, okay? And look at the number. It's right at that psychological 4,050, okay? So we might not get good volume to trade on gold today just by looking at this hourly, this whipsaw action, okay? But if we are looking for an hourly trend, okay, now you got to pay, you got to come with me now, okay? It is building, but it's still very bearish off of this leg. Like, look, it came down, sloping down. Yes, we're coming up. It looks great, but they could reject this shit down and bring it right back down. Why? Because they already closed it below that opening balance, but the buyers protected it. But if it comes back down black, like does something like this, I'll invert that green zone red, and then look at the selling right back down to the 3995, right back down to the double bottom on the hourly, possibly the lowest point of the day. Okay, so now I'm going off of the hourly, okay? Right now, if we look at the hourly, are we in a good area to trade? We can consolidate all of this. Look at this, the two white lines. That's our hourly flag we're in. The market, it's just going up, down, up, down, up, and it came down and going back up, okay? So now when we go to the 5 minutes, this is the volume that we have right now that we're trading, okay? I can't change the volume. This is what the market is giving us right now at 11:54 a.m. Eastern going into noon. Okay, there was the massive 10 a.m. move. Why? What happened at 10 a.m.? Something today happened at 10 a.m. What is today? Today is Tuesday, June 30th, 10 a.m. We had the consumer confidence report. Came out horrible, 91.2. What is that? It's the level of composite index based on surveyed households. Actual greater than forecast is good for currency. That's not actual greater than the forecast. The forecast was 94.4. It came out 3 points below at 91. That's why it's red. Okay, so what is this? Why traders care? Financial confidence is the leading indicator of consumer spending, which accounts for a majority of overall economic activity. Okay, so if that came out really low, that's probably pretty shitty for the US dollar. Okay, and then when that came out, when that was released, look at shitty US dollar, look at gold continue to drive. Okay, so look at the 5 minutes. Now, remember I told you clues. Okay, so there it is. It came up to the highest point of the day. Ask yourself, why did it not continue at 1025, filling that little tiny wick? There's the bearish engulfing candle, and now we're following this leg down. So remember I said, we're fizzling off right into that hourly zone. Now these 5 minute bars, okay? Look at what happened to our volume. Look how low it is, okay? So for a scalp little zone, look at the white line I use, and I can bring it down to those 5 minute bodies. Same thing that I do, okay? But now I'm just doing it on the 5 minute candles. So you see, I'm using the white line as my hourly resistance and just bringing it down to those 5 minute bodies. So I see now we're driving right back into it, which could potentially be where it came down, it's coming up. This could be a point where they push it back down, okay? Or we break above it, we close, we turn this 5 minute green zone, a red zone into green, and then we might be pushing up to the next red zone. Now I measure, let's measure. Guys, take your tape measure and measure from the white line. If we go into a buy and we fill all the way back up to, it's 125 pips. Okay, right up to there. If we come to the bottom of the red zone, look, it's 100 exactly. 100 exactly. Okay, let's say we're just small time scalpers and we just want to fill that wick. We're up 25 pips. Maybe we get up to 50% of that candle. It's about 30 pips. That's where sometimes when I'm trading 1 minute candles, I pip and dip right into 50% of that black candle. So that's why I have a lot of these red lines on my chart. Some of you guys don't understand why I have that. Okay, but that's if I'm looking for a small little scalp, you know, to just grab 30 pips just to fill that wick, get into 50% of that candle, because that's where it could get rejected back down. However, if we're looking for a bigger move, there's resistance here. We got to come back to the opening balance of that 5 minute candle. We got to fill that wick. Then we're back into the hourly. White line is the hourly resistance. Okay. And now look at, see how it's still holding? See how it came in? Now we got black candles coming down. So do we have 5 minute support? Yeah, there's support right here on the 5 minutes. Look at where the pivot is. There's a body open. It came down, but it closed up there. Look at the bearish ignited candle. Came down bearish, bearish, bearish. Picked up a wick and closed right there. Next candle open bullish ignited right there. So if we come back down, our 5 minute support is right here. 4,029 and 50 cents. Okay. So do we want to trade inside here? Yeah, we can. We can look for a trade in here, but ideally, I'd like to maybe see what happens above this hourly or come back down and see what happens at today's opening balance, because we could really flip. Now look at it. It could be like a head and shoulder pattern. Okay. You guys see this now. This entire area is a left shoulder. There's the big inverted head that came out, and there's the big V, upside down V recovery. We're right back into the right shoulder. So we got a high probability today. We might come back down, break, come to today's opening balance, bounce there. This is a red zone, get rejected, and it's a free fall back down to 3995. Okay. Do you guys understand that? That's a head and shoulder pattern. I'll put Donald Trump's face as the head. Okay. Do you guys see that? Donald Trump's head, there's his left shoulder, and there's the right shoulder. A head and shoulder pattern has a high probability of continuing to push down, okay? But if you're buying, okay, then we have to see, will today's opening balance still be strong with buyers, okay? This is called the Donald Trump head and shoulder. Guys on Zoom, did that analysis maybe hit home? Because some of you guys messaged me the other day. Oh, and another thing, my Discord, something happened with it. So I had to open up a new one. So if you see there's a new one, Sniper Ronnie, and I don't have like as much badges as I used to have. It's a brand new one. It's not spam. It's not a scammer. It's me. Okay. If you want to verify it, if you ever get a message from anyone saying Sniper Ronnie, verify it with me, please. Okay. Mahedi, is there a day off tomorrow? Dave, I think, is taking the day off for Canada Day. I will be with you guys post New York. Okay. The day off that we're going to take is Friday when the US banks are closed. And then Dave will be doing NFP with you guys. Okay. But I'll be with you guys tomorrow morning, same time, 11 a.m. Alex, good question. I love when you guys ask me questions like this. Is the 24th June daily candle structural? I love it. Okay. Because anything to do with price action, Alex, this is my bread and butter. I love questions like this. Okay. So June 24th, let's go to June 24th. Is it a structural candle? Let's see. Okay. June 24th. June 24th is right here. Okay. So you're asking me, is it a structural candle? So let's go through the checklist to be a structural candle. Okay. Is it, Alex, I'm going to ask you, I'm going to pick on you because you asked me the question. Is it abnormally larger than all of these other candles? Like the volume, is it minimum 2 times larger than this candle or this candle? That's structural, has more volume. Yes. Yeah. Yes. It looks like it's 2 times larger than all of these consolidated candles here. Sometimes it's bigger than 2 times, but it needs to be at least kind of like 2 times. Now, next question is, did it close below the previous pivot point? Yes. See, here was the pivot and that candle actually closed below. So I'm going to answer this. Wednesday, June 24th is a structural bearish daily candle. So out of that candle, what I would do, I did my analysis. I know it looks really choppy here, but Alex, what I would do with this big candle is grab my Fibonacci, go from the opening balance to the closing. Okay, I know it's going to look confusing here because I have so many lines, but I would look where 0.5 is of it. It's right there. Okay, 4,054. And then if I grabbed my 382 and the 618 of that zone, here's the bearish point of control of that daily candle right there. And then look at how we came back in right there. There's where it closed above. That's where I would have flipped that zone green. And then it was buyers, 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 but they didn't do their job to fill that wick. And then it came back down. Look, Alex, follow me, close below. So it's still a red zone. And then look at today. We came right in there. Look at today's high. It's in that red zone and still pushing down. So I would extend that massive red zone into the future. Okay. I know it looks confusing because we got a lot of zones in there, but Alex, that's to answer your question. That is, yes, a structural bear zone. And if you base it off of that, you can still see that the sellers are still in control. Okay. And then if I go to the 5 minutes, you see that big red zone. It's right there. So you can see today's volume at 10 a.m. came right into that big red structural daily candle. Daily candles hold more weight than just 5-minute zones, and there's where it pushed down. Okay, do you guys see that? I know it's really confusing because I have an hourly and I got a lot, but Alex, that's to answer your question, brother. Hopefully that makes sense. So, and to everyone, hopefully that makes sense. So, look at the buyers, what we're buying into. So if you want to continue to buy, like this could be a optimal double top zone to sell. Like here's the big move that came up. Here's where we're consolidating. If it does come back up, that could be a lower high right there. And then they push it down. However, if it's a double top, you're still doing a double top in the big daily zone. That's where those bigger daily sellers can offer and then really shoot gold down. Okay. I'm going to get rid of it because it's going to confuse too many people. But I know and you know in our heads where we're trading. Why? Because you do a daily top-down analysis, okay? I have it illustrated here on the short time frame, Alex, as an hourly zone, okay? The 5 minutes still have to get above an hourly in order to break up there, okay? But look at now. So we came in and then we have a bearish candle continuing to push down. So sellers are technically still in control. We've got lower lows, lower highs, lower low, lower high. Big bearish candle dropping all the way down. Yeah, there was a nice counter buy move coming back up, but you got to respect what I told you. The opening of these big bearish candles. If you don't, then this is what's going to happen to you. You're going to keep buying and you're not respecting this. This was half of the call, what I was trying to explain. That's why, guys, I want to say this. I'm at my best when I'm educating, and you will be at your best when you're learning. I'm going to state this right now. We have 600 viewers and everyone on Zoom. I know it's not what you want to hear. We're not a buy and sell signal channel, okay? Let me just get this straight. There's other great YouTube channels that are great for that. They just buy and sell, buy and sell, buy and sell. That's not what I do here. I'm speaking for myself. I'm not speaking for all of SST. I'm speaking for myself here. I don't do that. I like to educate, give you guys my analysis and my psychology going into taking a trade. I trade live with you guys. I've been trading live with you guys for over 6 years now. I'm not scared to trade live, okay? You guys know it. We took a live, but I don't want to you guys want me just to trade this just to get into a trade. I know myself that this is not a good area to be trading. So even if I want to take a trade right now, it's not going to be a good I want us to wait and see. Like, will they scoop some liquidity up here? What will happen down in here? We got to watch for clues like nice liquidity grabs and then watch where candles close and confirm. And I'm trying to illustrate to you guys that trading is a waiting game. Okay. If you're rushing or forcing trades, I'm going to tell you right now, stop doing that. You're going to continue to lose your hard-earned money, or you're going to continue to lose prop firms. Because you're not doing what traders should be doing. You're doing what a gambler should be doing. I can tell how inexperienced you are when you do that, okay? And I'm not doing this to disrespect anybody. I'm just trying to tell you, I used to be that guy where I was just forcing trade after trade after trade after trade. I was buying up here, and then I couldn't understand that the sellers are in control. Then I was adding more buys, and I was counter trading entire trends by adding more and more and more buys. And then they would just have a big black elevator candle and liquidate me and blow up my accounts. I was that guy. I went through that for years, and I choose not to go through that ever again, because now I'm actually, first time in my life, I'm consistent, I'm profitable, I can weather storms if I have a bad day. I can walk away from the markets when I need to. Like Friday, I am literally walking away from the market. I'm telling you guys, there will be no live stream on Friday. I'm taking the day off. Why? Because the US banks are closed. Even if we do have a live, yeah, YouTube can grow, you'll get some subs and things like that, but we're going to be watching candles just trade sideways with whipsaw action, and we're going to get frustrated, and it's not worth it. The beach day with my family is much more important than just trading sideways action. No disrespect to you guys. I love you guys. I'm here with you guys every day. But on a Friday when the US banks are closed, we all need to learn how to not take a day off. Take a day off. Monday will be better volume when the banks open up again, okay? Friday, if you want, back test. It's a great day to do some journaling, back test, go over some strategies. Not a good idea to be trading. Great idea to be learning. Okay. Now, unfortunately, like I said, this is the volume that we have right now. I can't change the volume. Okay. But now we got to see, will there be a second bottom? Now that's the next observation. It came down right there, came back up. So now it's coming back down. So are we going to get a double bottom where it comes back up? And then we see, will it be an impulse breakout? Will it come back up, get rejected back down? Or there is no second bottom? Will the black volume continue to fill that wick and close below? And then maybe we're going to have a further drop. But we really have to watch what happens at today's opening balance, because you can see right there at 935, 940, that's where it flipped bullish. Okay. And there's your clue. Okay. Remember, today is a good education class. Look at that big bearish candle at 935. And then look at how it opened bullish ignited. Look at it. And ask yourself, how did that candle not open black and just fill that tiny wick and start to drop? Look at it. The buyers, the market makers said it's not going down any longer. It's a bullish ignited candle. Then when it comes up, did it get rejected at 50% if you drew a line, if you cut it in half? No. Did it get rejected at the opening balance? No. It actually made a new higher high and engulfed. That's actually a 5-minute structural candle right in here, like of these. So have we pulled back into this thing yet? Look at how it's at the bottom of my green zone. That wick is right there. So we might be coming down into this right now. So if we're looking to buy, a good buy opportunity could be right here at the bottom of this green zone, because it's literally exactly 50% of that blue candle, and it's just above today's opening balance. So if there's going to be any daily buyers protecting today's opening balance from breaking down, if the market comes all the way down to the bottom of that green zone, that's where we should see some buyers stepping in and bringing it through there. Or we'll see some small liquidity without breaking the opening balance, okay? And when I got to watch for that, I got to wait for that, okay? That's what trading is. We got to wait patiently for that to happen. And if it doesn't happen, then we got to see it building some sort of structure up here, where it technically is building a tiny bit of structure right around these bodies, okay? Now, sorry, we're not done. But if you want to now add some indicators to your chart and complement it, indicators like to complement price action, okay, in my opinion. I add indicators on my chart after I do my analysis. A lot of you guys maybe add your indicators, then do your analysis. I don't like doing that because sometimes these things give me a different bias. So I like to go with my overall top-down analysis. I rely more on my zones and my points of interest as opposed to a 9 or 200 EMA, because I know that these are lagging indicators and they print after the bars form, okay? Real live price action is, that's it. This candle just opened. I know how it opened. I can tell if it's a bullish ignited. I can tell if it's a low wick. The indicator cannot tell me until after it closes, okay? But what it's telling me right now is it's verifying we're still in bearish momentum because the volume is still below the 9 EMA, okay? That's giving me verification short term. 9 EMA is the last 9 closing bars, okay? And show me we are bearish, which I understand we're bearish, okay? I can see how we're making lower highs. Now, if you want to add a higher time frame EMA, some of you guys choose a 50 EMA, a 100. I have the traditional 200. 200 is higher time frame, and look at where the 200 is. It's right above our opening balance, and it's going to come it's going to start to come right here, right into our green zone, right at our white line. So, you know what I said? If we're looking for buys, we can also use our 200 EMA as maybe some type of confirmation if it bounces for a buy. If we close below, then we're inverting that green block red. We're below hourly support. We're below the 9 and the 200 EMA. Then we could have a high probability to break in today's opening balance and then flip today's daily candle bearish and then continue to drop down, okay? And you might see it after the call, okay? We might not get it on today's call. Okay, and then the only other indicator I like to use is our SST daily bar indicator. If you sign up with us, you get all of these indicators. You get the SST daily bar indicator, the SST scanner. Like you can utilize all of these indicators to help you out with your trading. So this is the scanner. What it does is kind of, if I don't know what I'm going to trade today, Well, gold I can see is 44 on the RSI on the 5 minutes, 49 on the 15, 30 minutes is 53. So I can see like most of the time frames are it's hovering right around the middle. So it's not great. I can see GBP JPY is showing me something is overbought on the 15-minute, 30-minute, hour, and 4-hour. So if I'm looking to sell, maybe now I bring GBP JPY on my chart. I don't sell blindly, right? This is just to give us an overall perspective of what I have: gold, NASDAQ, US30, GBP, JPY, US oil, and GU. But it's telling me that this security, GBP, JPY, is overbought on the 15, 30, 1 hour, and 4H. So I could do a top-down analysis and look with a bearish bias for confirmations, correct? And then I can see US oil on the daily is very oversold. Okay, and might be a good opportunity to maybe look to buy oil, but not just buy blindly. I got to go do a top-down analysis and see where the daily is trading. Is it trading at a monthly area of support? Did it grab some liquidity? Because it could still continue to go down. Did Donald Trump say anything regarding Strait of Hormuz and Iran and what can affect oil pricing? But this is a scanner. It's really nice to use, guys. If you don't know what to be trading, this can give you maybe something to look at, okay? So that's the SST scanner right over here. And then the daily bar that I use is right here. I can change this daily bar to any particular time frame above 5 minutes. So I don't have to flip-flop on my charts. So I can go to settings right over here on the daily bar indicator. It's a really good indicator. You can come up here and under the inputs, see I'm on the 5 minutes. I can make it a 30, a 45-minute, a 15-minute, 1 hour. I can put it on the daily. So if I put it on the daily, this is the daily bar. So this is what the daily bar looks like. Is, remember, we know the opening price. There it is, opening balance. It was initially bearish. Now I can go back and look right there when it opened, or during the futures market when it came right down. That's what created the bottom. And since then, it's came back up. There's the highest point of the day. There's the highest wick. And since then, all of this 5-minute downtrend is creating the daily wick right now. So you still see how much daily bullish volume we're still holding at the opening balance. So you still see now it's creating a double bottom, right? So it's still holding, coming back up. Okay, and then altogether, all of these indicators can neatly be on your chart. News just came out saying central banks want to sell the dollar and buy gold. Okay, if that just came out, that's a good catalyst to maybe potentially buy gold. Let's see. I got the news right over here. Let's see what's going on news-wise. Central banks think the US has become riskier. They plan to sell dollars and buy gold, coming from CNN. Central banks think the US has become riskier. Okay, and there's the article. If you want to read it, it's right there. Yeah, that just came out right now, 1 minute before noon. Okay, time and sales when they release these news articles, right before a new hourly candle opens. Wow, something suspicious about that. Okay, and I want to know your honest opinion, okay? I'm a big boy. I'm almost 45 years old. I like to consider myself a big boy. Did today's analysis help you or not? Be honest with me and just give me the honest to God truth. Say, Ron, it absolutely didn't help me at all. I know all of this stuff. The price action that you explained to me, it doesn't help me. Just tell me the honest truth, because for me, this is what changed everything for me when I learned this stuff. I'm telling you the honest truth. I was a really shitty trader. I was struggling. I was a gambler. I couldn't get it together. I didn't know what. I was just getting mad, taking a trade, losing, adding more trades, hedging, doing all those stupid things that we all do. Over leveraged, blowing up accounts. I did it all. Okay. We don't have to talk about that. I've done it. Okay. I know a situation you guys are in if you guys are losing and blowing up accounts and can't figure it out. But what was figured it out for me was learning this top-down analysis. There was one day, I'll tell you the day, I smoked some weed, okay? And I just went. It was a Saturday night. It was late Saturday night. It was like 11 p.m. I normally don't go on the charts that late at night on a Saturday night. And I went on there and I was just kind of back testing, just watching candlestick. I was watching Bitcoin live. Like just Bitcoin, you guys know, trades 24 hours a day, 7 days a week. It was back in the day when Bitcoin just came out and it was on the charts on the weekends. So I just started watching it, just the candlesticks on the 5 minutes. And then I started to see, and this was back in the day, and I started to see ignited opens. And then I saw how it was holding. Then I saw the wicks coming into like 50% of the bodies. And then I'm like, okay, is this just tonight that this is happening? Is it just for this particular security, Bitcoin? Is it? So then I tried it Monday morning when the market opened. I tried it with Dow Jones. And I started to see very similar patterns. And I'm like, okay, this now it's working for two securities. Now let me try on gold a different time frame, a time frame that I don't even trade. I'm not really a swing trader of gold, but when I put it on the daily, I was just watching the daily candles and I started to see the same exact stuff I look for when I'm scalping on the daily candles. So then I started to come to the conclusion that this is not just like some sort of strategy. It's just how price action and auctions work in the markets. Okay, it's got nothing to do with this is the newest strategy. Oh my God, we got to sell this strategy. It's not that. This is just how basic price action moves in the markets. And I can verify this, that it does this on any security, you name it. And we can do stock market. We did the live of SpaceX when it IPO'd. And I showed you on the 1 minute candles, how there was ignited candles, how it made the resistance, how it traded right into 50%, how there was structural 1 minute candles on SpaceX. So it doesn't matter the security. You can trade Forex, futures, stock market. All you're doing is a standard top-down analysis, getting the overall bias and perspective. You're plotting your points of interest and your zones, and you're placing alerts in these locations for high probable setups. And your job now is to wait for the volume to come there. And then you got to look for those clues. You got to look for those patterns that you recognize. And that will make you that much better of a trader. I'm not saying you're going to be a 100% trader. No trader is 100%. But you might be in around now 60, 70, 80% where you're taking 10 trades and 6, 7, 8 of them are probably hitting your TP goals. And when you learn now, on top of that, risk management, then you're really stepping up your trading game. Because not only are you learning how to be patient and disciplined, you're learning the technicals, you're learning how the markets operate, you're learning the clues, the liquidity grabs, the stop hunts, the bullshit that the market makers do. You're learning that side too. And then you're also learning proper risk management. When you trade, you should only be risking a certain amount that you're willing to lose. And if you lose that, it's not the end of the world. I tell you guys, I'm very transparent. I risk 1% of my entire account every single day, okay? My goal is to hit 0.5%, 1%, and I'm done trading. Do I do that every day? No. But the days when I lose, I'm done with my 1%. I lose, I'm done, but I still have a lot of my account left to recover that 1%. I'm not blowing up accounts anymore like I used to. And what I do is I don't just, if I'm going to take a trade right now on today's session, I don't just apply my 1% on this one trade and hope for the best. What I do is I take multiple trades a day. Sometimes I take 3, 4, 5 trades a day. So even if I take 5 trades a day, okay, I take my 1%, I divide it by 5 trades, and then I'll get 0.2% for each trade. So if I take my first trade right now and it hits my stop loss, I've lost 0.2%. Okay, it's not the end of the world. You see, when I go into a trade, when I go and draw down, I'm not panicking. I'm still watching what's going on, price action. That's how I need you guys to understand trading. Okay, I know some of you guys are going to say, Ron, that's so slow. I'm not going to get rich quick. I'm not going to be able to buy my Lamborghini this year. That's fine. Okay, you can have whatever thoughts you have about becoming rich in the markets. And I'm telling you, the trading is not get rich quick. If you got a guru telling you that you're going to be the next Jason Belfort and you're going to be doing quaaludes on a boat and you're going to have hookers and cocaine and you're going to do all that, good luck to you. It's not going to happen, okay? You're not Jason Belfort, okay? He's one of a kind. He's the Wolf of Wall Street, okay? Only he can do that, okay? We're not at that level. So we're not going to be throwing fun coupons at your boss tomorrow at work. We're not going to be throwing lobster at your coworkers, okay? This is a slow grind. Trading takes years and years and years, okay? If you guys don't know what I'm talking about, you got to watch Wolf of Wall Street, okay? Take your time. We all want to be like him, but he's one of a kind. Okay, and what is gold doing? Absolutely nothing, okay? And some of you guys might be stressing out buying or selling, and it's just inside here. But what we can see is a potential double bottom, okay? But the volume has faded out, okay? It came down, came back up, now it came down. Here's the second bottom, building, but it's not really, breaking out or doing anything yet, okay? We can take a look at another security. How about we do this? You give me any security and I'll do a top-down analysis. Any security. This is what I can show you, that top-down analysis, points of interest, pivots. Maybe we'll see psychological numbers. Maybe we'll see something. Maybe whatever. You guys give me Euro USD. Okay, first person that just said something. Silent, bit or bit. Euro USD. Okay. So you guys see, I don't trade currency often. I used to, but let's do it right now. Euro USD, okay? So you're going to see, I'm going to do a Euro USD top-down analysis, and we'll see psychological numbers and watch, okay? So I'm going to show you. I'll have alerts here for gold. We'll have an alert here at this white line. If it comes up here, I'll be alerted, and I'll place another alert in the green zone, okay? We'll let gold continue to trade in here. We're not going to stress ourselves out. I have two alerts. So I'm going to go on Euro USD and let's do a top-down analysis. And to show you that this style, top-down analysis, figuring out what I do, works on currency pairs as well. Okay, let's do it together. So look at what I'm doing. I'm going to my watch list. Let's find Euro USD. It's got to be on here somewhere. If not, we'll add it. Euro JPY. Where's Euro USD? See, Ron hasn't traded Euro USD in years. Holy shit. Do I not have Euro USD? I have Ether USD. Where's Euro USD? There it is. Euro USD. Okay. So this is how I'm going to take off all the indicators. Okay. Let's go. 9, 200. Everything is off. Okay. So this is how it's moving on the 5 minutes. Okay. So for everyone on the call, this is Euro USD. Okay, there's a host pair and a base pair. Okay, so right now it's trading at 1.14137. You can see how many decimals. There's 5 digits after the decimal. So this one that's moving is the pipette, and then we've got our pips. Does this move as much as gold and US30 and NASDAQ? No, this is more of a slow man's security. This is a great technical pair to learn. If you're a beginner, I highly recommend you learn with currency. Either GBP USD or Euro USD are fantastic pairs to learn. Are you going to be making 50 pips on a 5-minute candle? No. This is a really large bullish candle. Okay, look at the size of it. Let's just measure it just so we understand that we're trading a completely different security. That's a bullish ignited candle, and it can look, the height, it's 12 pips. 12. That entire bullish candle is 12 pips. If this was gold, that same size candle, that would be 50 pips. Okay, if that was US30, it would be about 50 pips, the size of that. So you got to understand, it's when you're trading these things, it's when you say you want to make 100 pips, it takes a long time. Okay, but this is great to learn. Now, this is how it's moving on the 5 minutes. I'm doing a top-down analysis. Let's start, okay, from the daily. I'm going to do a nice, thorough analysis. I haven't done this one in a long time, okay? So looking overall at the daily, this has got to be something. This is the highest point I can see on January 27. Let's mark it, okay, as a yellow line, because I don't know what this is right now, okay? So it's a yellow line. It's a daily point of interest. It hit $1.20, okay? Now, let's go backwards and see. Okay, so it looks like it's a lower high from over here where we were trading back in January of 2021. okay? So it's a lower high. Back over here, what's this? 2018. It was 125, okay? So it looks like it's trending down. That's a lower high, lower high, lower high, and a lower high, okay? So that's overall, okay? Now, let's continue looking for obvious structural points. Do we see any obvious points, okay? And what I mean by obvious is, let's get more into this, okay? Here's a nice obvious point that we can all clearly see right there. See what I'm doing? There's a body, and a body, and there's bodies and a zone. So right there, and then there's your double top M that dropped. So right now, when I'm starting a zone, yellow line to that body, stretching into the future, and now I can see it was impulse, 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 and push down, double top, drop, okay? So that's a red zone. If it ever comes back up to 118, look at it on the dot, 118, guys. See that yellow line? It's exactly psychologically 1.18000. Look at it, okay? I'm not making that up. And I put it exactly right at those bodies, okay? So I'm putting an alert right there, okay? You guys, all your Euro USD traders probably say, I'm insane. Why is this guy doing that? Well, if it ever retraces back up to there, I could be selling the third top. If it closes above, I flip it green, and then I look backwards. I know where it could go. It's got to fill that wick right there. It's got to go to 118.47. That's a 50 pip scalp right up to there. Then it's got to go up to there, okay? We can all do that, okay? But we're nowhere near this right now. So let's continue going down, okay? We're trending down. Was there a pivot right here? Yes, look at the pivot. You can see it clearly, like right here. Is there a body and a wick right there? Yes. Okay. And look at this big drop. It was right near that yellow line where it came right back up. Okay. So is there a zone right here? Yes. See the little wick to that body. That's as much as you need to start your zone. Look, guys, this is good education for everybody. So I started green, right? So now I can stretch it into the future, stretch it into the future, stretch it into the future. That's where Euro USD traded right into it. Look, that was a black candle right into that green zone, back up. That was a black candle that came right into that green zone and held. Now we got a black candle Tuesday of last week that closed below. What do we do with the zone? You make it red, right? Stretch it into the future. Now I can see. Maybe you guys got sucked in buying last Friday. It came in, but look, you're coming right into the red zone and it got rejected. Look, we're trading right in it. We got impulse, 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 still holding. So that's a red zone still. Stretch it into the future. You want to go backwards? You want to back test? Go backwards. Go backwards, 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 backwards. And you can see when they broke it down, there's the setup. Look, guys, look at this shit. Like, it's unbelievable what market makers can do. It came down, it opened. This day did not break that little tiny wick. It came up and look, it got rejected and it closed as an inverted hammer. Now they came down black, 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 swiped the liquidity and then shot it right through there, okay? Look at it. And that's your morning star pattern. There's your big bearish candle. There's your inside star, and there's your bullish engulfed candle starting the next trend. Remember on yesterday's call, you guys, someone on YouTube said, Ron, is that an evening star pattern? And it was, and it sold it right down to where we bought, okay? So you see how, keep going backwards. If you want to back test, keep going and you'll see how zones are, okay? So now let's get more into what's going on here. Is this a structural bearish candle? Alex, I'm picking on you. You're the one that asked me before. I'm showing you a structural candle on the daily on Euro USD. Is this an abnormally large bullish candle, bearish candle that's bigger than this one, this one, this one? Yes, this one engulfed, one candle engulfed. Look, 1, 2, 3, 4, 5, 6, 7 bars. That's 7 days of trading, and one bearish candle closed below this blue one. Okay, so what do we do with this candle, Alex? Let's grab our Fibonacci. We just figured out our daily structural bar right there. Opening balance, closing balance. Go to 50% right there. There's the halfway point. Cut it in half. Daily, yellow. And let's find a zone off of that right there. Now, stretch it into the future. Have we came back into this zone? The answer is no. When I stretch all of these out into the future, so now if the buyers, if we close above here and it retests this and we're moving up, remember, we got a big job to do. We got to fill that wick, get up to 50% of that candle, get to the opening balance of that candle, and then we got to retrace right up there. When it comes up there, that's where they could shoot it right back down, right? Because we have not tested that point of control on Wednesday, June 17th, where those sellers came in and closed. Tell me, how does one day engulf 7 bullish days? There must have been some sort of news on that day. That's an abnormal candle, okay? So we've got that. Set an alert there. If it ever comes back up, look at the number, 1.15555, okay? Add an alert there. Okay, now let's continue. Do we have a pivot point so far? Yes, look at right here on Wednesday and Thursday, and we've got a retest. Draw a yellow line right here at the bodies, okay? 1.1357, draw. Is that the FOMC candle? Yes, there you go. Now you guys are seeing. So, no, that's not. Oh, yeah. Wednesday, June 17. You're absolutely correct. That is the FOMC. Okay. So that's news. And we have this Thursday NFP. Okay. So look at now how Euro USD is consolidating right at the neckline, because NFP could be where it comes back down for a second bottom or it breaks out. Okay, look at how it's just consolidating now. So, that's when you're putting news together with the candle. Okay, they're perfect. Great analysis. Okay, so you see now, I just drew a point of interest here at this yellow line. If it ever comes back down, this is where the double bottom could be on the daily of Euro USD. So I draw or I add an alert there. Look how I'm creating it, okay? Now, see a wick and a wick. So there's got to be something that happened in the past by this yellow line. Let's look, let's verify. Let's go backwards. Yellow line, we're still following it, okay? See, this was the first break of this zone. See where it came down, and came right back up. Now let's continue going yellow line. We'll find something. There it is. We found something, okay? So you see right there, when the bullish candle on Monday, June 2nd, new month, closed above, look at the retracement. Next day, it came right back down, and look at what it retested. The yellow line, the opening balance of that strong candle, still holding, okay? So do we have a zone or anything that we can base off of that yellow line? There's a tiny zone. I don't know if you guys can see it. I can see it. Yellow line to those bodies right there. I know it's tiny, and you guys are going to say, holy shit, Ron, but that's in fact where bodies close and open right at that yellow line. I go into the future, and I could still get that blue candle. So I can now drag it down to the wick right there, and that's my zone. My zone is not this big. I'm not gonna do something silly or unrealistic. That's very realistic. That's where that inside black bar closed, and then that's where the retest. So let's stretch that into the future. That's our zone, right? And then do we have bodies or points of interest? Yeah, you got a wick and a body right below. If it continues to drop, you do your further analysis. Back there, what's the date of this? This is back in May of 2025, okay? So look at now. Now I go across. Now what do I see? I see liquidity grab. Look at what they did, okay? So they broke it down last Wednesday, came back up, closed above, came back, black. But look, higher low. Came back up, new higher high, change of character. A lot of you guys use that change of character, okay? That changed the character of the downtrend. And then it closed right there. Look at the retest, holding. So you see, we've still got a good strong green zone. We can base a new point of interest off of that liquidity grab right there and have an alert in case it comes down there. And now what do we got? Let's follow it. So let's follow the last few days, okay? How do we trade on Friday, okay? It opened bullish. It was bearish. Did the sellers do their job filling those wicks? No. Came back up. Did the buyers do their job? They did. They created a high. They created a new high, but then Friday, end of day, it sold off. There was the close on Friday. There's the gap up. This is how markets gap up, okay? You can clearly see it here. That's where we closed on Friday. You know when I'm doing closing price, opening price. Look at the transition. We didn't open right here at 113.82. They gapped it up. There was the open of Monday. And then look at how they backfilled the gap, okay? I always say all gaps get filled, but it takes, will it be right away or will it take time? But look at, they gapped it up and then it was bearish. Black, filling the gap, came down there, and then it went right back up, okay? Look at today's lowest point. It's right there at Friday's close, okay? And now it came back up. Did the buyers do their job on Monday? Bullish, bullish, bullish. Did they break that high? Answer is no. That's a lower high, and they closed it right there. Now, here's where we opened. We closed yesterday. We opened today. Was it bullish today? Yes, it was. Did the buyers do their job? They, in fact, did. They brought it up here. They filled that wick and that wick. So we have a high of the day right there. It got rejected, coming back down to the opening balance. Then the sellers were in control today. It came all the way down, black, 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 black. See where it's holding support? So you see that little gap right there? That's where you can have a green zone right there. Right there. You can clearly see how it's still holding that gap, okay? And stretch it into the future. Okay, so you see that they're building a higher low off of this bottom right here. Now the buyers are coming back up, coming back up. We could come back up to the opening balance and flip bullish. And if we close above here, then you're going to flip this red zone green, and we could be bullish tomorrow for Euro USD. Now you can see how it's building, okay? So we came down one leg down. We're making a nice bottom recovery, higher lows, higher lows, higher lows with higher highs. But it came down today and picked up the liquidity. So we're still consolidating. So yes, it could close above. We retest this, we're driving, or it could just reject right back down. But we have areas of support below us. This block and this block is still holding, okay? So that's how it is on the daily. I've got all of my, but let's also go above. If it continues breakout above today's purple line and tomorrow goes bullish, where are we going? Are we going to go all the way back up to this red zone or up to here? Just do what seems logical, okay? Just draw a line where you get touches. Look at what I'm doing. This is where a lot of traders don't pay attention, okay? Look right here. Just look at the obvious first, okay? This is very obvious to me. There's a big bullish candle. If I'm kind of almost cutting it in half, now I can verify that it came down. There's a wick and a wick holding right there. Now I go across, I can see that's where the body bullish candle opened right there. And then there's a retest right there. And it's right near the opening of that bearish candle. So I'm going to say right there, and it's a nice number, 1.15055. If it comes up bullish, 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 that might be the resistance below the red block where sellers will step in and try and push it right back down, okay? But if you're getting nice pips filling all the way from that purple line up to there, maybe then do something. That's just like when we're scalping. Take your stop loss, go to break even, scale out some profit because you're counter trading. Even if you're buying, you're still going against the overall trend. So you still have to understand that there's still sellers in the market, okay? And now we go into the hourly. Off the daily, we go into the 1 hour. So now we can start to see Euro USD. We can pay attention to right here. Wednesday, 9 a.m. was news, June 24. It came back down, higher low right there, higher high. Came back into here, higher low, new higher high. Came back in holding this, but you see no new higher highs. It came back down, still holding this green block, consolidating. We got big, massive green volume today on Euro USD at 10 a.m. when we had that consumer sentiment report. So is this a structural hourly candle? I'm going to say it is. Why? Because look at the size of it compared to all of these other candles, and it closed above all of this structure. So this hourly candle, I would base a point of control off of it. Opening, closing, right? Where's the hourly? 0.5 right there. We're right at it. I know it's in a red zone now. So this is where you're going to get consolidation. Okay. So where's the green part of this candle? It's right here. Okay. So is it still holding up? This is where, you know, it's retracing all the way right back down. Now we're going to see if it's got a leg coming back up, but it's against in a red zone of higher time frame. So sellers could technically continue to push it down unless we can hold, then we're coming right back up. Okay. So we are still holding off of this trend, higher lows, and higher lows and higher lows. But overall, it's bearish, right? You could look at it like this, where it came all the way down. It's coming all the way here, here, and here, anywhere around here, that the sellers could easily come back down and break this down. If it closes below there, we're dropping down to there. That's where we got to see support. If it can't hold, we're coming all the way down there, right? Each one of those levels of green zones is where you could potentially buy pullbacks. I have alerts at each one of those locations. Now, this is how it's moving on the hourly. Okay, so we see the big move at 10 a.m., 11 a.m. coming right back down, and we're just consolidating right here at noon. Look at it. This is a candle that only has 17 more minutes to go. So it's been trading for already 42 minutes. And look at the range of it. There's no range. So when we go to the 5 minutes, this is what we see. Okay, there was the big move coming out of there. Came up to the highest point of the day, and now it's coming all the way back down. So look, it's getting ready where it's building to maybe potentially, let's see if it can close above this green zone and maybe start to come back up. Otherwise, it will come back down if you're looking to continue to sell Euro USD. If it closes below this, you're going to flip all that red, and then you got a big red zone. The hourly turns red. It looks like it wants to sell back down. Okay, but right now, it's pulled back right into the point of control of the 10 a.m. and now it's still holding bullish. Okay, so that's Euro USD. I can scalp this, I can swing trade this, I can do whatever I want with this. I've got all my alerts now set on my chart. Look, there's the zones all set. I can continue to watch this all this week, next week. I have everything. If I wanted to go a little more, I could have gone a little deeper, but that's good enough for scalping. And then you got to know your zones. Like, this is not gold. So even if you get a nice blue move, like you're buying above here and it gets through the red zone, that's only 10 pips. Like, even if it gets all the way up to the highest point of the day, it's 17 pips. You know what I mean? It's not 170. If that was a move on gold or US30, we'd all be hitting our daily goals. This is 17 pips, okay? So it's much different. The volume trade's different, but it's very technical. If you want to learn all about trading and how candlesticks work, watch this pair. GBP USD and Euro USD are great pairs. You can learn a lot from this and then start to come over to gold, start to come over to NASDAQ or US30. But this is great if you're a beginner, okay? And then you set your EMAs. Okay, we're right at our 9 EMA. 200 EMA is right here. And then if you want to add your daily bar indicator on whichever time frame you want, this is how it looks on the daily. Okay, you can see the big daily range. Even the daily range of the candle, if you just measure from the bottom to the top, the entire range of today's daily candle of Euro USD is 55 pips. The entire range of the daily candle is 55 pips. It's unbelievable, okay? So when you're looking for 500 pips with currency, we're just not having the same conversation, okay? So you got to understand what you're trading. If we now move over back to gold and we look at the daily range of gold, we have a different story. Okay, so we're back to gold. Now, if you measure the daily range of gold, holy shit. Like, look at this thing. Let's see the range, okay? All the way here, 39.40, and today's high is 4,062, okay? So that's a massive move, okay? Those are big pips, okay? It's a $120 move on gold. That's 1,200 pips right there of a range, okay? So you can see why traders and scalpers and intraday traders like to trade gold, US30 or NASDAQ, because if we have goals of 100, 200 pips, we can get them with these securities rather fast. If I'm sitting to get 100, 200 pips on GBP USD or Euro USD, you can see how much more difficult it is and how much more time I have to invest in doing it, right? Okay, so did that Euro USD analysis help? And you can see that there was structural bars, there was points of interest, there was zones, there was psychological numbers, there's a trend you can see. When I did the Euro USD, we lost 100 viewers. As soon as I did the Euro USD, you guys were falling like flies. See, nobody cares about those other securities other than just gold. But if you're still here, I appreciate you guys. If you can leave us a like and subscribe to the channel, if you're still here with us, if you're still learning, we do appreciate you guys. Okay, so we're kind of building a slow grind back up, but still not the greatest. They're not big bullish structural candles. They got wicks on the bottom, wicks on the top. We're still in this range, okay? Guys, what football games do we got today? We got some great games. What do we got going on today? Let's take a look at what's on the schedule today. 1 p.m. right now in the next 12 minutes, we got Ivory Coast and Norway. Haaland will be playing. Then game 2, 5 p.m., France versus Sweden. And in the late game, 9 p.m., is Mexico versus Ecuador. So some great games. Unbelievable games yesterday in those penalty kick shootouts. Germany losing and Netherlands. Unbelievable. 2 powerhouse teams eliminated. Congrats to Morocco. That's who Canada will play now on Saturday. Congrats to Paraguay and also Japan. They played the first half against Brazil. They were playing really, really well. And shout out to Japan. Like they have a solid program in there. They always come to these tournaments prepared to play, and they play their hearts out. So it's been a great tournament so far. Some iffy calls. Yes, there was some iffy calls. The interference with the goalie. I don't know. What are you guys' thoughts with that? The goalie interference, where they called the goal off in Germany. Tough way to lose. A lot of you guys are going for Morocco. Yeah, it's going to be a good game. Okay, so you see how we came up blue, 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 back up in here. Guys, this is mediocre volume. It's not good volume in here, you know. NASDAQ, guys, just real quick, okay? This candle right here on NASDAQ at 930, look at it. It's a abnormally large candle, and it did close above the structure right here. This double top, okay? Look at what I'm doing. This is just, it's not a top-down analysis. It's just, I'm showing you what we could be looking for, okay? See the double top? And then it dropped, and then it came right there at 925. Look at 930, came all the way up and closed above. So that is a structural candle. So first thing that I would be doing with that 935-minute candle is cutting it in half, finding the point of control. Maybe later today, maybe in the Asian session, maybe tomorrow, it will retrace back in here, and we could look for a buy opportunity off of here. So look at how I'm setting up my chart. 29,000 888s, 888. Okay, it's like a casino, like we're playing jackpot. Okay, the slot machines, 888, we win. Okay, so I'm drawing a point of control of that candle. I haven't done any top-down analysis. I know it's silly what I'm doing, but I know the power of 930 and that structural candle. So I would be doing the same thing even if I did my top-down analysis and I got yellow lines and purple lines. That candle right there, now I ask you, have we retraced back into that green zone? The answer is no. The lowest pullback we've had, it was right there, real shallow at 935 and 940, and we have not came back into here as of yet. So what I'm doing is I'm placing an alert in there, and maybe I'll revisit this later tonight, maybe tomorrow, but when it comes back in there, I could get a possible buy out of there. Okay, so like what I'm saying is that was the retracement. It's back up new highs. Okay, if it comes back down there, that could possibly be like a double bottom right there. If that can't hold, then we're coming back down, and that would be an optimal buying zone. I'll even write it on the charts. This is a possible buy zone because it has not retraced since Wall Street in here. So I can pretty much say with a guarantee or high probabilities, there's probably a shit ton of pending orders inside this zone pending until the market comes down there. Okay, the market's not there yet. Okay, so you got to look at what's going on in the market. Okay, but when there's a possible, if it does pull back in there, that would be a great high probable setup. So When it comes in there, I don't just trade blind. You got to watch what happens. It comes in there, maybe gives you an alert. Maybe there's one bounce out of there, then it comes back down, and then you look for your double bottom bounce. That's the bigger leg. Also, what you look for is if it comes down and breaks like the second bottom, but grabs liquidity and comes back in and retest, that's your buy opportunity too with the liquidity grab, okay? And then if all else fails, okay, that's why it says possible. If those don't hold up, then the only other option is the sellers are in full control. It's a black candle, not an impulse that just breaks and goes back up, but it actually closes black below there. And if it does, then the entire zone turns red. And then when it comes in there, it could be a possible sell zone. And then it flips and then it's coming to take out that body right there and potentially drop further. So that's when the zone inverts to a possible sell zone, right? If it goes through these options. But if I have to pick one with probabilities, the probability would be to consider it to be a buy zone at first, okay? And some of you guys use pending orders. You could be sitting in there with a pending order. I use market executions. So I wait for it to come there, give me an alert, then I look what's happening, then I buy and sell. But some traders say, screw it, I'm gonna put a pending order in there. I'm gonna wait for it to come in there, activate me. When it comes in, I've got my buy stop or limit, like it will come in there, you got your limit, and then if it bounces, you're in the money. Then or buy stop, you automatically will place your stop loss where? Below that candle, that wick. Are you going to give it more room to breathe below the structure? What's your TP? Are you coming back up to that? Would be support turning to resistance, or are you looking for a bigger TP up to there? Remember, there's areas where there's targets, okay? Do we all want, yes, just to go up there? Absolutely. But you got to understand, if you're taking a buy there, there's already an area of support established that could be the resistance right there. And it might come up there and it could come back down, right? If it breaks above there, again, your next area is the next pivot right there. There's a pivot and that could be your next pivot. Wherever this thing pivots, that could be your next pivot target. So you could have like a TP1, a TP2, and then a TP3 plus. Okay. Everyone trades different with TPs. All depends on what you're looking for, but I'll leave that on there like this and we'll review this back tomorrow and we'll see where we're at. Okay. So that's how I'll leave it for now. And gold is still in here, guys. I'm sorry. Like this is the worst volume we can be trading. You guys have to agree with me on this. Like if you think that this is amazing volume to be trading, you and I don't see eye and eye. We're not on the same page because this is just really difficult volume. Like even if you're in buys, look at how it's just coming right back down. If you're in sells, it's going right back up. There's wicks on the bottom, wicks on the top. This is, I would rather watch paint dry than to trade this. Like I would literally go watch someone just paint a wall and just sit behind him and just watch him roll paint on a wall. That would be actually more exciting than this. But it's just this time of day, you know, things will open up. Trump will fart or he'll tweet something this afternoon and markets will start to move. We're inching our way closer to Fed Chairman Warsh speaking tomorrow morning. We're inching our way tomorrow to 10 a.m. ISM manufacturing. This is going to be very volatile. So we're going to come in after this at 11. So we'll see what happens with ISM manufacturing and we'll be trading post. And then don't forget, guys, the entire market is waiting for Thursday for the non-farm employment NFP. And then that's when I suggest you're done trading for the week because Friday, US banks are closed. So you got to check with your broker. Specific securities will close early that day if Wall Street will be closed the entire day. But if you're trading other securities with your broker, they might be closing early. So you got to understand that. It might come like this time, 1 p.m., and you're in a gold buy, and then all of a sudden it stops trading. And then you're scratching your head saying, what the hell happened? I thought the market closes at 5 p.m. Some brokers close early on US bank holidays. So you got to know that. And then you might be stuck holding a buy or selling gold and you didn't intend to, and now you're holding over a long weekend, and war can escalate, anything can happen, peace agreements, you might be in a buy or sell, and then you wake up Sunday night, Monday morning, and your account is gone. Okay, so you got to consider that. You got to just consider that when you're trading this week. Okay. Okay, so now it's still sellers. Still sellers are still like lower highs. Lower highs, it came up bullish, but then it got rejected. Again, where did it get rejected? So anytime I'm like watching, I analyze. Like, look at that big bearish body. Remember what I was saying all day today? I know some of you guys are going to say, Ron, who cares? No, I do care, because this is what I talk about. See, when I always say the sellers who sold this big bearish candle, I don't know who sold. I'm just saying the sellers. That's a selling candle. Look at when it came right back up. You tell me, explain this to me. Maybe you guys need to teach me. This candle was blue, 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 and traded right at that opening position of that candle. And then explain to me why it got rejected and it's coming down. Give me, honestly, someone explain it to me. Because the way how I taught myself is, I teach myself, whoever sold this big bearish bar at 11:55 going into noon, when it retraced right back up, they have offers protecting their position. Because if it goes above there, then guess what? Their stop losses are above here, and then they'll get liquidated. So they're protecting their position, and look how it came down. And now we have a massive bearish, potentially structural candle coming down. So now the market is opening up when? Right before 1 p.m. In 45 seconds, we're going to have a new hourly candle open. Okay, so let's watch this. This could be a structural candle. So all we need to do is close below these bodies. And what am I going to do with it? You guys know what I'm going to do with it. I'm going to cut it in half and figure out the point of control. Because if it comes back out blue, 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 I could be looking to sell off of it and continue pushing down. Okay, so let's follow it. We might see a live structural candle taking place right now, going into 1 p.m. Why don't we trade in NQ? We do trade NQ. We do trade. You can see I have NQ right over here. I just didn't get to it today. We have our signals that we've been sending out all day. So there was a buy on US30, which hit 100 pips. We had NQ the other day. Gold was a buy that hit 200 pips. So, you know, we've hit some pips in our group. Okay, so let me just go back to what we're doing here. Is that a structural candle? Alex, I'm gonna pick it on you. Did it close below that body, that pivot? Yes. Is it an abnormally large candle compared to all of these other shitty spin top? Yes. So let's do what we do here. Grab our Fibonacci, opening price to the closing price. See, does it surprise me that it's blue right now? No, but buyers are buying the pullback, buying the dip. But when it comes into where's 50% right there, 4,028.75. Do we have a point of control? Yep, there it is. Do I make it green? No, that wouldn't make sense. It's got to be red, representing sellers. Okay, there it is. So what I can do is I can now patiently wait with an alert. If it comes back into here, I could be selling with the majority of those sellers. But right now, it just opened blue, 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 got a shallow rejection, short wick, and it's popping. So I'm still, everyone's going to say, well, Ron, why didn't you sell? Why didn't you sell? Well, then that would defeat the whole purpose of figuring out a point of control and patiently waiting for it to come back up. Then if you understand what's going on here, then sell. Yes, I see it came up blue, shallow pullback. It's got a short wick. It popped and it's dropping, okay? But did you just come down, grab your pips and dip out of the market? Because it could swing right back up or it could come back down, okay? I don't know what to say, but look at it now. Now it came down right to the top of the green box and flipping back up blue. So I base everything off of when the candle closes. That was just the first 2 minutes. Now it's blue. So we got to watch and see. This would be an optimal selling area. Why? And look at the 9 EMA is coming right into it, okay? Yes, this could go down further, but eventually maybe 15, 20 minutes, 30 minutes, it will retrace in there. That's the whole point of being patient and disciplined in trading. Maybe this candle will come all the way right back into there. Is it guaranteed that it will sell when it comes in there? No, because the buyers could invert that. Remember, this is a bigger green block. It could come up blue, 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 come in there. I'm looking to sell. I'm looking for a wick, but it closes above. Then I invert it, red to green, the same zone, and could be buying off of it, take it back up to that body and fill that wick and get back up to there, okay? but that's a good structural zone to base some analysis off of, is what I'm trying to say. That's a structural candle. Like, I don't base anything off of that shitty candle. I don't base anything off of that. Not 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 off of that. This is the candle that we base our analysis off of. And if you don't believe me, that's fine. You know, I do my thing, you do your thing. I'm just checking spreads right now. Guys, I just have about 5 more minutes on the call. I got my kids with me because it is the summertime now. So I promised them I'm going to take them out for lunch and keep them occupied because they're so bored here. So we're going to go out for some lunch and ice cream. You guys are welcome to come if you guys want some yummy ice cream. I want some mint chip. Some mint chip. I've been craving that all night. I've been thinking about it. What's your favorite ice cream flavor? Mine is mint chip. And yeah, and we got the football game. Yep. Norway is starting up. Pistachio. Oh man, I've never had that. I should try that, Tulumi. Pistachio. I see it there. I've never gotten it. Maybe I'll get it today. It's there. I love pistachios. Like, I love salty pistachios. I could eat bags for days. Oh, Belgian dark chocolate. Oh yeah. Now you're talking to me. Marble slab downtown. Yeah. Oh yeah. You throw Snickers, Mars bars, candy in it. Oh yeah. One ice cream costs like $30 when I'm done with it. The Mr. Generalist, if you're having a difficulty signing up, just send us an email, okay? And admin, myself or Dave will get back to you today. Send us an email at stocksnipertrading@gmail.com. And we'll get right back to you, okay? We apologize for the inconvenience, but we'll get back to you. Mildred, yours is simply strawberry vanilla. Yeah, there's nothing wrong with that. Okay, so we came almost up to that zone. We didn't tap into it, and they've rejected it. And this is like a Tetris piece. We got a big bar, an inside blue bar, and it's opening ignited. Look at the location too. That was where the line of support was. See now how it's resistance, and we're continuing to push down. So this is that game Tetris. If you ever play that game Tetris, this is a great scalping candle to see the momentum continuing to push down. However, we're trading at a very, very, very larger zone down here. This is the hourly support zone. The 200 EMA is here. So we might find some support now. To bring this thing back up. So I think now the markets are going to start to open up. Trades will start to happen maybe in the next 15 minutes, 30 minutes, like right after the call. Sometimes the trades open up. And then also, guys, don't forget that this is today's opening balance right here. Okay, we're not too far away from it. And if you look at today's daily candle, that's the bullish volume we still have left in it. Okay. If this gets exhausted, we could flip today's daily candle and be very bearish. However, if it's holding, we got to see it continue to build at this hourly support and maybe close above this point of control and invert it. Then we could look maybe this afternoon that gold could be bullish going into the afternoon, going into the close. Okay, guys. So please, if you guys can monitor this, watch it. Okay. I have to step away right now. I got to go take the kids out for lunch and ice cream. But I appreciate all of you guys. Tomorrow morning, same time, 11 a.m. Eastern. We'll get in. We'll analyze the charts. Tomorrow, we're coming, we're post news. So don't forget that. So tomorrow will be more volatile. Maybe markets will be more moving tomorrow, not just this sideways stuff. Tomorrow is Wednesday. We've got the Fed chairman speaking at 9 a.m. but more so at 10 a.m. ISM manufacturing, okay? High impact red folder. So we'll be coming in at 11 right after all of this happens, and we'll get right into it on gold and NASDAQ. We'll do 2 charts tomorrow. I'll do a quick top down on both of them so that we're watching 2 charts tomorrow, gold and NASDAQ tomorrow, okay? I wish you guys have a great day this afternoon. Enjoy the warm weather. It's hot and humid. That's why I'm going to take them out for some ice cream right now. And I had a great call today. Thanks, guys. If you can please leave a like and subscribe to the channel. If you learned something new today, if you like the type of analysis we do here, yes, we do trade with you. We do go into live trades. I just didn't see anything during the 2 hours. Unfortunately, now it looks like the market is moving, but I got to wrap up the call. Okay, guys? So I hope you guys learned something today, something new. That's my goal here, is to hopefully everyone learn something new. We did that analysis on Euro USD as well to show you that we can analyze different securities, not just gold and NASDAQ every single day. You can do whatever you want, okay? Now you got to watch for what's really happening. Watch for clues. Now they're taking out the hourly support. Continue to watch, guys. This is where the markets get really interesting on moves like this. This is when you can really see what they're doing. You just got to watch, wait for bodies to close and see. Now we're approaching the opening balance, the hourly, nice supporting zone. So are we going to see buyers coming out of here, or is it going to continue selling? And we flip today's daily candle and it could be bearish, and then you're selling still off of this block. So you see how the market is moving away from this block? That doesn't mean that we can't sell off of it. It might come in here 30 minutes later and then come right in there and then have the sell, right? That's why I have an alert placed in there and I'm waiting for it. I can get rid of this red line and just wait for that opportunity there. Obviously, if it comes in here, that's the better selling opportunity. But you can see it's already diverged away from there, okay? But guys, we will see you guys tomorrow. Thank you guys so much. Have a great day. Enjoy the football games if you guys are going to watch the rest of the games today. And God bless everyone. We'll see you guys tomorrow. Enjoy your day. Thank you, guys. I appreciate all of you guys. Everyone on Zoom and YouTube, have a fantastic day. Now the markets are going to open up a little bit, guys. So if you're looking for trades, this is the type of volume now it's opening up. But just look for what you guys are looking for. Don't just trade blindly. Watch and see what's happening. Look for clues. Wait for bodies to close. It's still bearish. You can cut that candle in half, that black one. Now we're building at the 200 EMA and the hourly. But this could be just one bounce. Like it could come up and then they push it right back down. Then you're looking for a second bounce, okay? This is where I wish I had more time with you guys, because this is where it gets really interesting at these levels now. Now we're at a point of interest, okay? So continue watching and see what happens here, guys. Okay, have a great day, and we'll see you guys tomorrow. Thank you. Thanks, everyone. Have a good day. Join us tomorrow, 11 a.m. Eastern, and we'll get right back into it. Have a good day, everyone. Thank you, guys. If you guys can leave us a like and subscribe to the channel on your way out, we appreciate it. Have a good day.